Welcome to the podcast.
Thank you.
And I guess you want to maybe do a short introduction about yourself.
Yeah, short introduction. I operated as a portfolio manager at Morgan Stanley for many years. Operated in that space, but after close to 20 years, there was a misalignment between how I wanted to spend time relative to how I was actually spending time, and so in June of 2024, I stepped away from Morgan Stanley. I began working with Paul Hutchinson from Child Liberation Foundation. And much of my work during that time period was, dedicated to, efforts to eradicate human trafficking and find solutions to help restore survivors back to their natural state of authenticity and love and trust. I've also been operating as the CEO of the Vine Global Impact, and the Vine Global Impact is a mission-driven and values-driven social impact network that operates as a bridge of trust between family offices, non-for-profits, and also global government officials. And what we do is we work diligently to try to help individuals and non-for-profits propel their social impact initiatives forward, and we operate as a bridge so that family offices can connect with other like-minded family offices and individuals in a very systematic and much more efficient manner that helps align, that helps to ensure safety across the network.
So how have you experienced or adopted modern technology for your previous or current businesses? AI, crypto, and now even quantum. How have you personally or in your business experienced and adopted it to your daily life or business? And how has it impacted you?
So at the Vine, one thing that we are really trying to do is leverage artificial intelligence to improve the way that humanity connects across sectors. It's highly inefficient, and what often happens is individuals who are networking and trying to grow and find the right people, we often spend too much time in that space, and at the Vine we believe that humanity can connect much more efficiently, and so we're trying to integrate technology across the network so that people can, so that introductions are automated, efficient, and very much aligned with values. Um, with regards to quantum, have not done anything obviously at this stage, but super interested to find investments broadly across that space. I've been scouring and on the lookout for a long time. There's a couple equity positions that I think are really interesting, and they are doing quite well. With regards to crypto, um, I think I like what you're doing because you're producing, tokenized, uh, securities, if you will, that are backed by real estate. So there's a real purpose behind what you're doing that has some, where valuation methodologies actually mean something. And but however, with regards to Bitcoin and some of the other cryptocurrencies, I personally find it difficult to value them. Any of the traditional currency valuation models that are used to value currencies, they don't work in the crypto space, and so that I believe is a little bit of a concern. And then secondly, the correlation of cryptocurrency relative to just say broad market, indices, if you will, the correlation is very high, and that shouldn't be the case. So, I've kind of been sitting on the sidelines, on with regards to crypto.
Well, we actually started also doing quantum encrypted dual layer payment solution using stable coins for international remittances. But I guess with crypto, it's and I understand where you're coming from because It used to not be, until just a couple of years ago, the crypto market was not really priced into the global markets. It was more like an underground thing,
Hmm.
with a bunch of crypto traders pumping and dumping these coins. But now it is exactly correlated to the markets because it just moves with whatever the general market is doing. So it's not really like a crypto; it's more like a security investment of I guess, a global community.
Yeah, and I think fundamentally, many of these developed market economies, they're massively over levered. And there's definitely a case for some type of alternative to traditional currency. U.S. government, we have $38 trillion worth of debt on our balance sheet, and we are in the fourth stage of a big global debt cycle. And historically, when this happens, you get extreme partisan politics, global division, civil unrest. You have a lot of problems. And historically, whenever a country is at a debt to GDP ratio of 130%, that's when you begin to have some problems. And what's kind of odd is, you're seeing, Congress entirely ignoring, history, and the data is there. And if they don't do something, to um, something meaningful, then we are likely to repeat the past, and we simply shouldn't. So um, I do think that there has to be an alternative to stabilize payment systems, etc. If any of these developed market economies were to experience rapid depreciation, which could happen. I mean, nobody is insulated from those types of events. But the United States is in a very competitive position. But financially, we do need to make some difficult decisions, and I'm not very optimistic that those decisions will be made because the current political system doesn't allow for that. The only way to lower the deficit in general is to cut entitlements or increase revenue, right?
Mhm.
And it's nearly impossible to cut entitlements because the way that the system is rigged, it's they leverage the entitlements to get votes. And so if they cut entitlements, then they lose votes, and then that just seems to be an ongoing issue.
They don't have a job.
Yeah, they don't have a job. So
Are you familiar with this book called The Forced Turning?
no.
It's about the global cycles. And so, according to that and some other theories, basically we're at a 80-year global like war convergence. The last time we had like a major war was 80 years ago. We're at a convergence of a monetary cycle. Usually, that about 80 years or so is how long a monetary system lasts globally historically. We're at a 80-year technology convergence. Well, not 80-year. We are at a technology convergence because now we have all these new tech that's kind of like a new, I wouldn't call it industrial revolution because it's not really industry. It's more like technology and services revolution. Because I know you said you're not super familiar with quantum, but I guarantee you that not even this time next year, but 6 months from now, you're going to start hearing in the news quantum being getting mainstream usability. There's already a programming language with quantum to use quantum computers. There's already several projects that are using computers that are operating on quantum fields, and but are not at freezing level. So like they can just be normal using that quantum processing. So we're going to start having that AI, quantum, and crypto convergence all together very, very soon, like just commonly used in the market.
Yeah.
I don't know how many jobs it's going to replace or not, but certainly I feel like a lot of companies are using that as an excuse to lay people off and at the same time pump their prices because, the Wall Street right now, anything that has the letters A and I next to it gets a big valuation boost.
Yeah. Yeah. Yeah.
In quantum, even more so. I mean, there's companies that launched this year that no revenue, no contracts, just an idea of doing stuff with AI, getting billion-dollar valuations, you know?
Yeah, the amount of speculation that's occurring broadly across the market's been very high, and historically, what I've found is that investors often ignore market fundamentals, and I think the reality right now is that earnings growth on a rolling 12-month basis has begun to decline. And when I look at CNBC or any of these, market-oriented types of news networks, they don't report accurately on the fundamentals. It's a lot of noise, and I think that noise distracts investors from the basic, the direction that fundamentals are actually moving towards. And I kind of think right now is a time to play it safe. If you have declining earnings growth and uncertainty around some inflationary types of variables, then you know that dictates lower perhaps not as high intrinsic value broadly across the market. So I think with multiples being high and earnings declining, in that environment, it's not going to suggest that multiples should continue to stay as high. And if you look at where multiples are now relative to long-term historical averages, they're way too high. And then secondly, one thing that's really interesting that I've noticed with investors is the amount of market risk that investors are willing to take is really high, right? So investors are obviously very overweight. The top 10 highest weighted stocks within the S&P 500, and they're ignoring the valuations. They're ignoring they're ignoring a number of factors, and I think that could end up hurting investors over the long term.
Yeah. I mean, I definitely think that the market is very speculative right now and just driven by buzz more so than really anything else.
Yeah, it really is fascinating. I remember back in 2010, and like close to the depths of the financial crisis. If you go back to like 2008, 9, I mean, market multiples were so inexpensive, and yet investors were very, very weary to buy technology, for example. I remember
Mhm.
we bought Apple, back at like 8, 9 times earnings in I think it was like 2009, 10, something like that. And people were very, very cautious. People didn't want to buy it because all they looked at was, the amount of price appreciation that some of these, technology stocks had. And they were entirely ignoring, the opportunity that, investors were ignoring the fundamentals. They were scared. They were myopically scared, and they ignored the fundamentals. And then that set the stage for a very, very long term bull market broadly across the space. But people were scared because they were still myopically focused on the tech bubble burst of the early 2000s, right? Fast
Mhm.
forward to today, market multiples across a lot of these technology companies are massive.
Hundreds.
Yeah, yeah, it's
In the hundreds.
we've gone from 9 times earnings to 25 and much higher, right?
I think
And
Tesla and Nvidia are in the hundreds.
yeah, and Nvidia, surprisingly, I think is at like 55 times earnings, which is really interesting. But I'm just kind of cautious. And whenever I see the herd move a specific direction, and they ignore fundamentals, that usually creates an opportunity someplace else. I think investors should be looking in those areas where opportunities are more abundant, earnings are attractive, and valuation is much more attractive.
What do you think is going to happen now that Japan started raising the rates and stop buying our debt?
You know what? I'm not entirely sure at all. I think there is likely going to be more countries that over time, choose to, allocate, investment into, other, global, sovereign, uh, you know, um, sovereign currency, if you will. I think Switzerland's quite attractive on a relative basis, and but I don't know how that will directly impact us. But over the long term, if you have fewer buyers, then that could inevitably cause U.S. Government debt to increase in terms of overall cost of capital, and that dictates lower valuations across equities and has meaningful implications across all asset classes in general.
Do you want to discuss maybe how anything about Child Liberation Foundation, or if you guys are using any kind of technology over there
No,
or adapting any technology?
where Child Liberation Foundation is really focused is trying to create a long-term sustainable funding strategy.
So obviously, I'm friends with Paul also.
Yeah,
Years ago, I discussed with him, this was, I'd say, probably like 2 years ago, maybe, uh, to use AI. And I'm sure you've seen like how now AI can mimic avatars. And
yeah,
since a lot of these kids have trust issues with adults for obvious reasons, I was discussing with him to build like a VR technology for rehabilitation so that instead of being guided by an adult, they can be guided by a cartoon through
wow.
their rehab process,
That
which
that
now is like, when I was showing him examples, this was like cutting edge. Today, it's like, much easier to do, to execute.
Yeah, so there is a group called Untrafficked. They operate out of Dallas, and interestingly enough, they are using cartoons to communicate messages for kids for healing and restoration, and also preventative types of strategies. And but that group in particular, they are integrating an AI driven type of system that can be integrated into um, you know technology to help keep children and people safe. And I think that's probably all that I'm able to say on that one. I'm curious, frankly, just to see what's going on in your world with regards to Del Norte and your expansionary plans, across governments and whatnot. I think tokenizing real estate is super attractive, and I'd be curious to see what your expectation is for tokenization of real estate broadly across the U.S. markets. I think individuals that own homes, and they're paying 6% to sell them and 6% to buy. I think that's too high of a transaction cost, and that cost needs to come down with technology. And super curious to hear your expectation for how tokenization could evolve broadly across the U.S. markets
Yeah, don't
within.
forget about the other 1 or 2 points for title and legal that they have to pay.
Yeah, yeah, precisely. The costs are way too high.
Yeah. So we have completed our software to tokenize real world assets. We're actually just finished it just a couple of weeks ago. We're now going after the B2B space and onboarding individual projects. The government, obviously, we still have those deals. There, it's just everything with government takes forever. It's a very slow and tedious process because sometimes even if they like it, uh, every meeting takes like a month or two just to have the next meeting, and there's usually a series of meetings that have to take place. Whereas with individual deals, it's more like, we shake hands, make a payment, and it's a done deal. And um, there is, I'm sure you've heard like Larry Fink and BlackRock, all of these guys. Actually, Morgan Stanley too, I think, spoke about it. I know Chase, the guy from Chase, was talking about as well that their long-term plan is to tokenize assets. Now, I think they're more focused on bonds and equities and financial instruments, whereas I'm more focused on real-world assets. But the end goal is kind of the same: is to make a seamless 24/7 market, which obviously will it does require government participation, because government is the last person that says this is a real transaction or not and put their stamp on it. But given that we already have made progress in at least in 4 countries and are now working in the US to do that, I think it's just a matter of, I wouldn't even say years at this point. I think maybe as early as next year, we're going to really start seeing these type of transactions on chain where you can buy a real world asset, whether it's a house or a car or business, and invest into a fraction of it. And then if you want to get cashed out quickly, you'll be able to trade these fractions of that asset on a secondary market, which is, my other company that I co-founded, XYRA. We are doing these fintech for stablecoin payments, so that when you have the payments in digital format, they're easily traced. So there's no like you have to wait for a wire, you have to wait, or with cash it's completely how to say it, completely invisible if you want it to be. With stable coins, you're still pegged to the dollar, so you don't have that fluctuation in price, and you don't have that risk, because with the new law, in order to be a stable coin, you have to buy government debt, at least in the US. So it's basically the same thing as the dollar. So they issue the dollar through the Fed, or they issue the dollar through a stable coin, same thing. They're printing the same debt and buying it back up. And now that I think that they're pushing that off to the private sector, which is actually better. But on the benefit for us as the provider, and for you as the consumer, is you can actually, as soon as something is on the blockchain, you can track it through its entire life. Like as soon as it's created, from that point onwards, you can see who got it, when they got it, when they sold it, when they bought it. Like you can see it on chain, because the way the blockchain works, you can't delete things. So it's very helpful because it is programmable money. And so when you are doing, let's say, a fractional business, and you selling fractions of that business, instead of relying on the individuals to provide you with financial statements and receipts and all kinds of stuff, if it's all done through this blockchain network, you can just pull up an app on your phone and see exactly what's going on at any given time. And the same thing when you want to trade it, there's no hiding any of the factual information. It makes things seamless, and I think it takes the bullshit out of the business transactions.
Yeah, that's nice. How do you see, Del Norte kind of expanding broadly across, extending its geographic global footprint?
I mean, right now we're still focused on LATAM.
Yeah.
And I mean, our business model is pretty simple. We work with the governments, we get them to approve these NFTs and tokens as valid document format, tokenize the data, and then because these governments are usually not well off financially and can't pay the quite large expenses that we have to incur to do the actual work, they let us monetize it through third-party services, so providing third-party services. So we integrate with local banks, with insurance companies, with brokers, and now with my own payments company, so that because we're doing all the KYC work, because it's provided by the government, we can now instantly issue them. Because remember, half the population in LATAM is not banked right now. They don't have a traditional banking system. They have a traditional banking system. They don't have traditional bank accounts, but they all have cell phones.
Yeah.
Doing this, and by having stablecoin that are pegged to the dollar, which everybody everywhere accepts, it's easy for them now. They already KYC'd, So now they can just transact immediately.
Interesting. So some of these, LATAM countries, they're, they have, much tighter rules around capital mobility outside of the
Mhm.
country. How do you anticipate that will impact just LATAM in general?
I mean, they have licenses, right? Getting a money remittance license is a lot easier and simpler and faster than a banking license.
Yeah.
Obviously, if you do want to be a full-fledged bank, there is a lot of hoop jumping. It's expensive and it's very time consuming. But getting a remittance license, and again, the rules in LATAM are actually they're strict for some things. They're very non-existent for other things. Like if I want to be a lender in pretty much any Latin American country, I can just start lending you money. Like
Uh,
there's no, I don't need to have, as long as I'm using my own capital or, the capital of whatever pool that I have, and it's not a public offering, I don't need any licenses. So I can start doing loans or microfinancing or even loan sharking like this.
yeah.
Like
Yeah.
there's no regulations against it. So here, even in the US, it's more strict. In Europe and other countries, forget about that. You need to, it takes like years and years just to get the license. But yeah, and if if you're intimately familiar with the local regulations, it's easy to navigate it. It's not as bad as people think. Certainly not on this side of the world.
Okay. Wow. Interesting. I love what you guys are doing, and
Yeah.
I'm super excited to see how you guys grow and expand, and the infrastructure required to be able to execute is very, very robust. So we are rooting for you, and I think you have the potential to democratize an asset class and make it much more efficient. And I think there might be a lot of real estate brokers that might not be too happy with you in the future, but it's something that needs to happen. I mean, like real estate, even though it's illiquid, this is 2000, 25, and we have the potential to um, make we have the potential to have significant change across the space, and no one wants to pay thousands of dollars to execute a transaction. It doesn't it shouldn't cost that much.
Yeah, well, I mean, that's kind of our goal is in this case to liquefy illiquid assets.
Yeah.
And
So
then there's and as you know, in we have capital markets here in America. It's very common. People are familiar with stock market, but those type of things, as you know, because you've been to Latin America, they have a stock market. Nobody really uses it. Whereas here we have maybe 10% of the population trading on Nasdaq. In a country like Honduras or even Mexico that does have much more robust stock market, it's still like 1% at best, if that.
wow,
In
wow.
Central America and some of the other smaller countries in the Caribbean, it's like, you can probably count on one hand how many stocks they have on their market.
Yeah, 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 yeah,
They have no liquidity because they have no trust.
yeah, yeah. Wow.
Yeah, but yeah, we hopefully will solve that in the long term.
Okay. Well, very excited for you. I love the idea, and it needs to happen. So I wish you all the best with that.
Likewise. And again, thank you for coming on the podcast.
Thank you for the opportunity to come on, and we love what you're doing, and we support you, and look forward to being of service in whatever way that we can at Divine. All right. Thank you, Anton.
Thank you.
Bye.
Bye.